Hello, agents. I'm Joel Willis, mortgage broker, and thank you for joining me. Today's deeper dive is going to be how to calculate a total mortgage payment, including taxes, insurance, and even mortgage insurance, quickly and accurately. By having this ability at your fingertips, it's going to allow you to better qualify your clients so you can make sure that you're showing them the right home that's going to fit their needs. And if not, you're going to find out which homes are going to fit their needs in terms of price range. And it's also going to build more confidence in you. Your clients are going to look to you and think, wow, hey, my agent really is helping me out a lot. They are the expert, they're the point person in helping me navigate what could be a complicated process to buying a home. Oftentimes, my agents will call me and say, hey, Joel, I need a quick payment scenario. And I'm happy to help. Give me that call. But they might be at an open house, or they might be at a soccer game talking to another parent or something, and they want that payment quickly. And the best way I can help you is to show you how I do it so that you can do it on your own, anytime, quickly and confidently. So how I do it? It's an app on my telephone. All right. And there's a lot of free apps out there. You might already have one. Maybe you've tried some and been a little frustrated with it. I'm going to show you how to go through this so that you can be confident that the information you're getting is correct and that you can do it quickly. So again, a lot of free ones out there. I use Loan Pro Calc, which is free for a month. And it's $1.99 a month, which I don't mind paying because it's easy to use and I could toggle between different loan types. And we're going to do that. We're going to go from conventional to FHA, and it doesn't erase your scenario. So it's pretty easy to compare different loan types. It's a pretty cool app, but there's a bunch of them out there. Find the one that you're comfortable with. They're going to all function very similar to what I'm going to show you here. Now, what I don't recommend doing is using the online services. So if you go to your search engine, Google, or whatever you're using, and type in mortgage calculator, a whole bunch of things are going to pop up. And when you click on them, they're usually sponsored. And, it's going to take a while to get that information. They want a lot of information from you. Sometimes the information they give you, it's slow or it's inaccurate, and then they solicit you mercilessly after that. So the apps are the way to go. Find an app that you're comfortable with. We're going to take a look at Loan Pro Calc, and let's get started. I'm going to share my phone screen with us, and we're going to go through scenario really quickly. We're going to see how to get those numbers and also how to utilize those numbers for some trial closing questions, and to make sure that your clients are being served to your best ability. All right, so let's get started here. All right, so now we're taking a look at the telephone here, and I'm going to click the Loan Calc Pro. Open this up. I got to do the agreement. All right, and what we're going to do is we're going to do a scenario for both conventional and FHA. You see along the top here, you have your conventional, FHA, VA, USDA. We're just focus on these top two. Let's do a scenario for a owner-occupied purchase. So we're going to click the purpose, going to hit primary residence on that owner-occupied. Let's do $600,000 purchase price, and let's go with 10% down so we can see how the mortgage insurance works here. All right. Taking a look at the rate sheet, 6.99% today, and that's with no points, and we're going to do a 30-year term. All right, so you see you got your monthly payment already, $3,589.01, but as you know, that's only part of the story. The other part that we're going to need is, of course, to give them that total payment with taxes, insurance, and mortgage insurance. So let's go ahead and get started with the mortgage insurance. What we're going to do, let's collect a 760 plus. Let's use that for the scenario. And you see the mortgage insurance pops up 126 down. Very important to note, that's much higher than my mortgage insurance. I'm about half that for this scenario. But you want to tell your clients, hey, I'm giving you a higher estimate rather than low estimate to be conservative. They're going to appreciate that because they would rather know, hey, this is the higher range rather than a lower range and be disappointed. So keep in mind, I want lower insurance in mortgage insurance. Have them call me, but let's go ahead and utilize this for the scenario. All right. And then for taxes, in California, 1.25%. That's how files are underwritten in California. If there is Mello-Roos or additional taxes or HOA, you could go down a few fields and enter what those amounts are. Let's use 1.25 for this scenario. And now let's talk homeowners insurance because this has been getting a lot tricky. I'm sure you've seen these rates have been rising. So I'm going to use 0.42. Not that long ago, I was using 0.33. 0.42 is going to give us in the ballpark unless you're in a special hazard zone, like a high fire zone or a flood zone. High fire is getting super expensive. You guys might have heard of the California FAIR Plan. You might have had to deal with it. So if you're doing a payment scenario on a specific home, if it's in one of those zones, you know what? We want to make sure that we have some idea what that is, because I've seen them $6,000 a year, even higher, added to the insurance. So let's make sure we got that. But here we are with our figure, $4,550. Now you ask your closing questions. Is that about what you had in mind? You got to figure out if they've been working with a broker. It's like, well, yeah, they've got their payment in mind. They've done online research. Now they want to talk to a broker. All right. Now let's say you're talking to them and they say, hey, well, our credit score is not that great. It's okay. It's 640. look what that does to that mortgage insurance. $4,009.50. It really brings it up quite a bit. All right. So when you're looking at that, it's like, well, all right, maybe we need to talk an FHA loan for borrowers whose credit score isn't quite so good. And how we're going to do that, it's pretty simple. We're going to go up to the top here, and where it says FHA, we're going to click over to FHA. Our scenario is still here. We do need to change a couple things. Let's take a look at what that rate is. FHA today at market open, when I publish this, is 6.25%. A lot of people say, hey, Joel, why don't we always use FHA? It's just, it's got a lower rate. Well, if you look up above that, you'll see FHA upfront MIP 1.75%. That's one of two mortgage insurances FHA charges. They take 1.75% of the loan amount and add it back onto that loan amount. Now it is financed, so the client doesn't have to pay for it out of their pocket, but they will pay for it, in this case, $9,450 when they either sell that house or refinance. It's surrendered equity. High credit scores, conventional loans still better. All right, so 6.25%. There is another thing we need to change on FHA, and that's the monthly MIP. This calculator is a little out of date. So monthly MIP for FHA is 0.55. So you're just going to want to remember that. Any calculator you're using, it might default to some of these older ones, but it's 0.55. So we're going to enter 0.55 to get our accurate monthly MIP. Now we got everything in there, and look what that did to that price, that monthly payment. It dropped it down almost $400 for that lower credit score profile. This works great. And that's something you could show them, and there's a value for you. They're like, hey, wow, my agent really knows about this. They're helping me with my payments. And then, send them over to your preferred partner, send them over to me, and we'll formalize that approval and get this going. Because once you're in that payment range saying, hey, is this going to work? Then you really solidified that relationship with them, and you're well on your way to helping them get into their house. All right. So now you've got this tool. Thing is to utilize it. Get out there, talk to your clients, be confident in this. And if I could help, give me a call anytime. And deeper dives in the future, sometimes you're going to look at those payments and someone's like, yeah, they qualify for it, but gosh, it's just a little too much for them. We'll talk about buy downs, temporary buy downs, and other tools that you can use to help make those clients make that decision to get into that home. I'm Joel Willis, mortgage broker, and I'm here for you.